Hi, this is Drew Tignanelli. This is our September update, and I wanted to start off. We're going to go to market commentary in a second, but we wanted to start off with something that's causing me some frustration. And that is when I talk to clients and they say to me, I just sold my rental property a month or two ago, and I immediately my mind goes, wow, what kind of tax consequence could that have been?
Right.
We could have talked 1031 exchange. We could have talked Delaware statutory trust, where you could defer all the gains on that. Or I hear a client say, "Yeah, I just signed up for Medicare and I got a Medigap policy and
Yep.
I got Banker's Life or whatever." And I know that that's not one of the more cost-effective Medigap policies you want.
Well, there's just so many opportunities. There's so many times, whether it's even buying a second house and not knowing about the time period to sell the first one. The point is that we want our clients to reach out to us more often.
Well, that's what we're here for. That's what the cost of working with the consulate is all about, is for comprehensive planning. It's not just the investments. It's talking about all those tax planning. You got a kid going to college, you want to be talking to us. Is there some tax planning
Sure.
strategies? They call you up and they say, "Yeah, I just got all my estate documents done with Joe Doe, the lawyer." And I look at the documents and I say, "Gosh, I wish I could have seen this before you signed it, because we need to get this rectified, and so forth." And now they got to go back to the attorney. The attorney's going to charge him again.
Right.
And it's talking with us in advance of anything. You're buying any kind of insurance, you're changing jobs, you're buying a home, you want to do your estate planning, having us review your tax return. I look at a lot of clients' tax returns, but I don't look at enough of them. I'm talking about ones they use other
Right.
tax preparers. We encourage you, if you have a tax preparer you're happy with, continue to use them if they're doing a good job. And or if you're doing it yourself, we have no problem with that. We do not want to necessarily do every tax return. Tax returns
Right.
are more of a value add we do for people who don't feel they've got somebody and they don't want to do it themselves.
And there are certain situations where, if your particular situation is very specific, we may recommend that you use a different tax preparer that has that specific knowledge. One of the things I think, though, that really needs to not get missed is the fact that, on top of the fact that all of our advisors are really well educated, they're staying up to date on all their stuff, they know all this technical information. You may be in a scenario where you think you know that as well, and it may be true. But the one thing that our advisors have that almost no one else will is the fact that we're working with 1,000 families on these types of concerns and issues. So whatever is coming up in your life, we've seen it before, and we've seen the outcome afterwards. So in addition to the technical data, we also know kind of the softer side of these decision-making. The experiences.
Yeah, experiences.
And we take that value to add to you.
Are critical. And but when I review clients' returns done by other accountants or done by themselves, I don't know the exact statistic, but I'll bet you it's close to 50% minimum where we're finding a mistake that has to be addressed.
Right, and a mistake that may be because of some omission of information.
Or
the preparer didn't know, or the client didn't know to tell.
The preparer didn't know, the client didn't know, or TurboTax didn't know. TurboTax is not omniscient. We have to understand that. It's a great program. It can work well. But you have to know what the outcome needs to look like.
Right.
And you throw any complexity at TurboTax, you better make sure that it was done right. And that's what we can do, is just give that second pair of eyes to say, this is correct. But here's the point. Call us before you buy insurance from somebody. Call us before you sell that house, whether it's your primary house, a rental house, a second home, whatever. Call us before you get that new mortgage. Call us before you do your estate planning. Let us look at your tax returns before you file them. If it has anything to do with your company benefits, talk to us. Talk to your advisors. That is what we do.
Right.
That's what we do.
That's
the value that we add, and we're talking thousands of dollars a year that in situations where clients, look, we have a project right now where we have the ability to put back required minimum distributions before August 31st.
Right.
Okay, and we tell clients, And sometimes the client will come back and say, nah, I'm really just going to keep that the way it is. Now, they
Sure.
think they know the information. But until we actually sit down with them and say, no, let's look at this clearly before you make that decision, don't assume you understand what the possibilities are. And almost every single time after they have us explain the full thing to them, they say, oh, now I see the full picture.
Sure. So our clients pay us to help them make better financial decisions. That's the job of a financial advisor. Help you make better financial decisions. But you got to include us in the process.
Yeah, absolutely.
So on that, what's going on in the market?
On that, what's going on in the market?
On that, what's going on?
The market is at an all-time high right now, but it's not really penetrating through that all-time high as nice as you would expect. But that's not uncommon for the market. Well, it has a lot working against it, but it's not uncommon for it to hit a barrier and have a pullback for a period of time. Maybe it's a 5% pullback, maybe it's a 10%, maybe it could even be a bigger one, 20% or so. The point of the matter is that the market's acting very logical at this moment in time. Markets react to Federal Reserve policy. That's what markets react to, because they're the ones that juice the economy with liquidity. And if there's liquidity and the banking system is relatively healthy, then the Federal Reserve's market activities encourage stock markets to do extremely well. Right now, they're very accommodative.
Yeah, I mean, that's what I was going to say. The Federal Reserve, JP's being very, very generous.
Mr. Powell, right?
Mr. Powell.
Jerome Powell is the current Federal Reserve Chairman. And if you want to worry about a president, Jerome Powell is the one you want to worry about, not Biden or Trump, not Obama or Bush or something like that.
Every 4 years we have this conversation. How impactful is the President of the United States on the economy and the market?
Well, you get a lot of bad information out there just trying to get people to read articles or to get them to buy their newsletter, and they're throwing this garbage out to people. Oh, the market's going to plummet to zero. Even if we get the president of the United States saying that if I don't get reelected, market's going down to zero or something ridiculous like that. But no president should ever take credit for the stock market, because presidents don't really impact the U.S. presidents. Right. Federal Reserve Chairman presidents can demolish a market in a very short period of time if they want to.
Right. The president's effect on the stock market and the economy is generally indirect and in some cases marginal. Like Drew says, the biggest contributors to how is the economy and the market going to run is going to be Congress creating bills, levying taxes, and then obviously the largest direct impactor is the Federal Reserve Chairman, who makes the monetary policy that really guides and governs the market. It slows it down when it's going too fast, and it tries to, give it a poke and get going when it's not going fast enough.
But even if the President, the House, and the Senate get together and say they want to do something, normally it's an impact on an industry as opposed to the economy as a whole. And that's been proven over time, and people keep telling me that Ronald Reagan's going to be the greatest thing for the stock market. A year and a half into Ronald Reagan's first term, the market was down 35% into the first year and a half of his presidency. Obama's going to destroy the market. He was up all 8 years of his term. I don't think he had a single down year over those 8 years. President Trump's going to be the worst thing that ever happened to the market. Market was down 12% after he was announced as the victor in overseas trading. But by the time the U.S. market closed, it recovered every bit of that and was up 2 or 3% for the end of the day.
Yeah, we'll show this in the video better, but Drew and I were just reviewing a chart that kind of shows that the fact that which party is in power, which president is, has just very little impact over who.
The three reds, the only negatives are three red ones.
Right. Well, and the point here is that it's not causation.
Yeah.
I mean, that's the thing. Thing to pay attention to is look at the actual facts. Just because this happened while that president was in or that president was in, it doesn't mean there's causation in it. There's a number of statistics that are out there that lead truly to what I think the core of the election's effect on the market is, which is The market wants to know what's going to happen. And if the market thinks what's going to happen, then happens, the market's very happy. The market doesn't like surprises.
Right.
So, there's a statistic, analysts found that the stock market gains an average of 5% when a new party comes into power. I'll bet you if I only said that, that would lead you to, think something. But that same group said that when the same party retains power or the same president is reelected, that the average returns were slightly higher at 6.5%.
Yeah.
The truth of the matter is, it says same, different. It's
Right.
all about change and stability.
But we're getting a lot of clients who are worried now. And I'm talking a lot of clients that are worried now. I don't normally get calls even when the markets are going down. I don't normally get calls. But now I'm getting calls. I got to get out of the market while it's up right now, or things like that. I'm getting these calls. And look, I'm not going to argue that the market's not going to go down, because it's a 50-50 shot, basically,
Right.
that the market might go down over the next 6 months or so. But nobody who thinks that if there's a presidential election or a political change that takes place, that it's going to bring the market down, because the market thinks 6 months to a year ahead. So the market's already predicted who's going to win the election. The market's already thought that out.
And a good investment portfolio is generally 5 to 10 years trying to think ahead.
Absolutely. And, if you try to get out of the market, you have to make two perfect decisions. You have to get out before it drops, and then you have to get back in before it starts rising. And history has proven that people cannot do that.
Wait a minute. Every once in a while, someone does it, and they get to be on the news every time there's a market disturbance for at least 2 or 3 more market cycles before they're thrown out as...
Elizabeth Gazzarelli is a great example of that. She called the crash of 1987. 3 months before it happened, she said, I think the market's going to go down, and I think it's going to be a terrible downturn. It could be one of the worst ever. She was right. You know? And then they quoted her every time there was anything happen to the market. And by the time 1989 came around, she was wrong on every other single prediction she made, and she disappeared into oblivion. Now she's got her little research company out there, but
Right.
she's disappeared into oblivion. And the reason is that you cannot predict it on an ongoing basis.
So circling back, it's always important to show both sides of the story. It's not that the president doesn't have any effect on the market. It's not that the president doesn't have any effect on the economy. They get to do the presidential orders. What are they called? The executive
orders.
Executive orders. They get to have some control over business and market regulation. They get to appoint people. They get to appoint the head of the Department of Commerce, Trade
Department of
Representative.
Labor.
But most importantly, they get to appoint the Federal
Reserve Chairman. That's the important one.
And
Absolutely.
They can, maybe move by picking this one versus that one, but in the end, it's still going to be the same. So, I think what Drew and I have been talking about is that the real end result of what should I be thinking about with my investments in regards to the election, it's to keep an eye on what, and you alluded to this earlier, what sectors could most likely be affected by a particular party or person's agenda. We know that when Obama came to office, solar was going to get a boost, and coal, he
hated coal. And 90% of all coal companies filed for bankruptcy during President Obama's presidency. When Trump came into office, he made it very clear he didn't like China policy, and what did he do? He hammered China for 4 years now. And China's stock market did horrible for the last 4 years. It's only been in the last few months that they've started to revitalize, because I guess the market is predicting that Trump may not win.
Right.
And so, this is the way markets operate. And if you're concerned about the market, the best you should ever do is move a small portion of your money out of the market for a short period of time. But you have to have a strategy as to why you're taking some money out of the market and how to put it back into the market. If the market goes down 5, you put back so much. If the market goes down 10, you put back so much. And if at the end of 4 months or 5 months or 6 months or whatever, if the market doesn't go down at all, you put it all back in. You got to have a strategy as to how you do this.
And that's just so you don't commit complete financial suicide. In the realm of things, you're taking a higher risk of lower performance returns when you make moves like that.
And here's an interesting fact. Everybody thinks the market's at some astronomical high. Do you realize the market since January of 2018 is only up like 6 or 7%? That's like 2.5 years now. The market has only risen like 6 or 7%. And also, here's another interesting statistic. Since 2007, the market has only doubled once. One double in 13 years. Do you realize between 1982 and 2000, the market went up 11-fold? 11-fold. Between 1982 and 1987, the market went up 3-fold in 5 years. You know, people who think these markets are overvalued, you really have to start looking at the statistics as what makes an overvalued market. And this market is fairly valued at the best, and companies in the atmosphere that they're in the best economic environment. I don't care who wins the presidency. I am not politically oriented in any way, shape, or form. I can deal with whoever gets in office, and then give me your rules. Just tell me what your rules are, and I'll deal with them.
Now, tax planning, we might do a little bit more on that one.
Yeah, well, you know,
that's a different story.
You know, those are easy. But anyway, we're out of time. The point is, don't make any financial moves without telling us in advance. Don't tell us afterward. Ask us in advance. I'm thinking of Medicare. I'm thinking of my child's going to college. I'm going to sell a house. I'm going to buy a house. I'm going to sell a rental property. I'm going to move companies. Company benefits are coming up for... Talk to us, please. And also, don't be afraid of what might happen over the next 6 months. Markets will go down. They went down 35%, 6 months ago? And now they've made it all back again. You know, so markets do this. They go down, they go up. And you're not going to hit the top. You're not going to hit the bottom. The best thing you can do is, if you're concerned, take a little bit, 10%, 15% at the most, 20% at the absolute most out of the market if you're concerned. But never go completely out and think you're going to predict when it's going to go up or down. Anyway, that's enough, right?
That's enough.
That's enough. Enough's enough. This is Drew Tignanelli saying God bless.